Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts. The first chart I'd like to look at is the euro against the dollar. Okay, straight to the main event here. Yesterday there was a key reversal up. After 5 days of testing and retesting the mid-May to date uptrend, currently at 112.59, the market has seemingly finally given up. Today we're higher. However, overhead we still have, for the moment, the same cap as before, the old neckline of the July 2017 to November 2018 head and shoulders top, currently at 113.34. So watch out. The whole question of whether we are constructing a topping action or a bullish halfway hesitation is still open, though I keep hoping for a conclusion sometime soon. In the meantime, we still have a series of potential targets on the upside for the previously oft-mentioned diamond bottom. The first potential is at target X at around 116.75, with a further fuller potential in target X1 in the 117.25 area. We also have a potential target X3 on the upside in the 116.65 area. This would only work if we see the whole of the last few weeks act as a possible bullish halfway hesitation. There's a long way to go and many things can happen which may derail the move up from the diamond bottom pattern. Just watch out for that bullish halfway hesitation and just in case, topping action. Next chart to look at is cable, aka sterling against the US dollar. A second bullish white soldier here yesterday as the market continued its bounce up and away from the big 50% Fibonacci line for the March move at 123.01. This time the market punched up through and closed over both the short medium moving average, currently 124.14, and the medium moving average, currently 124.55. Today we're higher still, moving up over the lesser Fibonacci level at 125.13. There is some congestion further overhead, but it is seemingly not that strong. That is until we reach the long moving average, currently 126.94. The next chart to look at is euro against sterling. A second bearish black crow and also a second consecutive close back below the key 50-cent Fibonacci line for the March to April move at 90.85. Prices dropped as far as the combination of the short moving average, currently at 90.11, and the lower time, currently 90.09 of the big February to March bullish shift pitchfork. They are being tested again today. So far they've held up just as they have done in the past. Please note that just below is the April to date uptrend, currently 89.76. That is part of the April to date bull channel, which was or has successfully run this market higher these past few months. US dollar against the Indian rupee now. Okay, now things have become interesting here. Not because of yesterday's action, that was just a second indecisive spinning top. No, it is today's action, a big bearish long black Maribozo. Importantly, it has punched down through the rising medium moving average, currently 75.13, and even more importantly, it has punched down through the key low from April at 74.90. Why is that important? Well, it's because that threatens the whole idea of an ascending inverted scallop pattern, of which I've been talking about, well, for weeks now. This is a major move. It needs to be confirmed in the next couple of days, and that means confirming with closes below 74.90 level. After that, the ascending inverted scallop pattern will be retired. So watch carefully as the next move may be a topping action. The next chart to look at is the US dollar against the Brazilian real. A bearish long black Maribozo yesterday. Interesting because it sliced through the combination of the short stroke medium moving average at 541.16, the recent 50-cent Fibonacci line at 539.29, and the neckline currently 533.52 of the reverse head and shoulders pattern formed over late May to late June. Through all of them as if they were never there, which is a surprise given how they held up the market earlier in the week. This bearish move has, or was generated, I suppose, in hindsight, unsurprisingly, by the old bump and run trend line, currently 551.47. It just goes to show the bump and run as a pattern may be dead, but the trend line that generated it is still strong, or awkward, depending on your point of view. What that pattern may have morphed into is still, okay, a possible ascending inverted scallop pattern. A sign of this was how the market fall was finally held up by the big March to May 50% Fibonacci line of 530.54. Let's see how that 50% Fibonacci line fares today under pressure. Well, that about wraps it up for today. So good trading and stay safe in the markets and in real life.